Can the market continue to rotate its way higher, away from danger, and take advantage of those holiday season tailwinds? 11 months through a year that investors should be very thankful for. Let's ask Adam Parker, Trivariate Research founder and the CNBC contributor. Adam, good to see you.
Yeah, great to be here, Mike.
So we're starting to see the consensus for 2025 coalesce. I mean, right. I guess general terms, market should be up 10% if you listen to strategists. Economy growing above trend again. Yields here maybe lower. Fed doesn't have to do too much, and profits can go up double digits. Does that make sense to you?
Well, the most worrisome thing hearing that is the very same people who were generally negative a year ago and 2 years ago, and the market went up, are now positive. So if you romanticize you're a contrarian, it's harder to be. In fact, you cannot be a contrarian bull anymore. Right. That's probably the worst part about it. I think the second thing would be it's a little bit talking out of both sides of your mouth to say, I want the Fed to be accommodative, but the Fed doesn't have to do anything. I think in the past we would have said we want the accommodation. So I think the bull story, has some things going to it. We'll talk about those, I assume, but I don't think it's as clean as it was a year ago. Certainly on the sentiment and the policy side.
Yeah, for sure. Lower wall of worry this year. Although I guess you could also say, look, if you want to say that you're super bullish, that might be out of consensus in the other direction. Not you, but somebody could easily say, look, I think we're in the early stages of a massive acceleration across the board, and therefore 10% looks light.
Yeah, I could see the long-term bull case for sure, which is that we're 2 years into investment in AI that likely will drive earnings higher for a lot of companies. And probably the most bullish thing I could say about 2025 will be if I get a proof case from a real company, hey, in the past I would have hired X number of people, now I didn't as my revenue grows, that'll cause a lot of optimism about, let's say, 2027 through 2030 earnings. So that's likely going to happen next year.
That's the big picture, kind of market-wide story. But what's really been interesting recently has been the rotations and the way the market is just really shuttling over in a particular direction. Financials and other cyclicals working. I looked earlier. I think only 3 of the biggest 10 stocks in the S&P are up today, and only 3 of the top dozen year-to-date winners are up today. So clearly, there's a lot of let's grab for some laggards and let's see what's unexploited. I know you have some kind of likes and dislikes out there. What makes sense at the moment?
Well, we write that note Sunday, the level set every Sunday. We send it out. And I tried this week to say, okay, what's up that I like still? What's up that I kind of don't like? And then on the other side, what's down that I still don't like? And then what's down that I feel like is an opportunity? And if I walk through those, I'd say quickly, everybody in the world thinks equal weight's going to beat, cap weight. So I think that's the most consensus trade. I don't think it makes sense for software to beat semis by this much for a very long period. So I'd probably start to shift in the other direction. Yes, semis are cyclical, but they're also more impregnable to disruption. And so I'm starting to think I got to sell some of the software stuff and own some of the semis. Within the financials, as you mentioned, I can still believe in the alternative asset managers. I like those a lot. I think we're going to see M&A that's going to benefit the big guys. I'm less convinced that regional banks are a win. Lower rates, they don't benefit from M&A. So I'm seeing a lot of that. On the retail side, I still don't like the physical retailers. I've come on this show for 2.5 years and said I don't like Target and I don't like Kohl's and I don't like Dollar General, and I still think that's true. I'm a little surprised how much some of the restaurants are up.
Yes.
I probably would fade things like Eat and Cake and those kind of things. The stocks are up a lot, and you and I were talking offline. Things are expensive. So.